they're going to feel this rate going up. We might see inventory levels spike. We might hear different news, but I have a feeling when that does, the nation will react.
Hey y'all, Katie here with Team EvoAZ at eXp Realty. We are so excited for season 4 of Real with Matt and Katie, and we have so much juicy real estate goodness lined up for you for this season. Thank you so much for following us and for listening to our show. Remember, we are based in the Phoenix, Arizona area, so if you're interested in buying a home, selling a home, or you just have general real estate questions, please don't hesitate to reach out to us. We are a valley-wide team. Our handle is at Team EvoAZ on all of your favorite social media platforms. Enjoy the show.
Hey, everybody, it's Matt and
Katie.
Wait a second. It's funny. Sometimes I say it backwards, whatever. Anyway,
a lot of things backwards sometimes.
But stop it right now. We are that real estate married couple that works here in the Phoenix area. And you know what? Ryan? I didn't even realize it because I've been working so hard lately. But on April 12th, it was my 15-year anniversary of having my license here in this area.
Happy anniversary. My goodness.
Yes, thank you. I didn't even celebrate it all. I remembered it the next morning. I was like, oh, I could have had a reason to celebrate last night, but oh well. I celebrated.
A lot of experience, in the Valley. Absolutely.
Yeah, exactly. I celebrated by putting another house under contract. Why not?
Right. Hey, that's the way to celebrate right there. Congrats.
Yeah.
And happy anniversary.
Thank you so much. As always, once a month, we have Ryan with Waterstone Mortgage here with us, and we're talking through very, very local specific stuff that's going to be impacting your situation here. If you are in the market, considering being in the market, or maybe it's far off, maybe it's a couple of years off for you, but you're smart and you're learning your numbers and you're figuring things out now. So here we are, Katie and Matt, Team EvoAZ, talking again. Market update with Ryan. Let's talk about rates, sir.
All right. Yeah. So if we could get started like we normally do, interest rates, that's on the top of everyone's minds right now who are looking to buy or own a home. And the upward trend that we had started to see in the beginning of the year has continued, unfortunately. And right now, on average, we're seeing rates pretty much in the low 5s. And, in December, they were pretty much in the low 3s. So we've seen a sharp increase over 2%. And I know I mentioned it last podcast, there's two main reasons for that. One is that inflation right now, as everybody knows, when you're getting gas or buying food at the grocery store, prices are high right now. Inflation is at 40-year highs. And when inflation's high, rates are high. Yeah. And on top of that, when the pandemic started, the Fed started buying mortgage-backed securities, keeping rates low for 2 years to get us out of a recession during that pandemic period. But they're stopping that purchase. They've announced that because that's really what led to inflation. So those two factors are what's leading to the spike in rates. But there's a third factor now that's kind of also leading to it. And initially, most experts were knowing that these two things were going to happen. So they were expecting rates to go up, but they went higher than a lot of experts were even predicting because of this third factor. And that's the Federal Reserve's balance sheet. Now, what that is when they buy mortgage-backed securities to keep rates low, they keep it on their balance sheet. So what we were knowing was going to happen is that they weren't going to buy any more. But now what they're saying is they're going to be selling some of those to unload some of their balance sheet. So that's kind of a double whammy. They're not going to stop just buying them. They're going to sell them. So that's really the news of that happening. They started discussing that in February, and during the Fed minutes in March, they announced it again. So that's why we saw rates in the 5s when a lot of people were expecting it more so to be in the mid 4s. So, and just to add some perspective on the thing, is it's still historically competitive interest rate. When I got started in the 2000s, 2000 to 2010, rates did average, mid to low 6s during those periods. And of course, my mom always tells me when she bought her house out here in 1982, it was a 16%. So you always got to have perspective. And we still do, on the bright side, expect rates to go down as, the Fed is working hard to control inflation. And when it happens, which eventually will start going down, rates should kind of go down with that. So, we have to be patient. We'll probably see better rates.
Are you feeling any impact with the increase at all in your applications, or is the flow still normal for you?
Well, what's interesting is they came out with some statistics, about what mortgage volume is going to be this year. And they predicted it's going to be 2.6 trillion. And that's still going to be the third highest level of mortgage origination over the past 12 years. Third only behind the last 2 years, obviously, which was, rates at historic lows. So what they're taking out is mainly refinances. So we definitely have seen less refinances, because most people actually took advantage of that over the past 2 years, and no one wants to refinance in the 5% range. But purchase volume, we're still seeing very consistent right now.
Yeah,
you're seeing the same thing. I know you guys are busy.
Yeah, we're super busy. Personally, we are not seeing any sort of impact, really. I mean, I'm anticipating an impact at some point, but I'm not really seeing one, with the exception of maybe a handful of first-time home buyers that are kind of right at the max anyway. Also, we just recently found out a couple of days ago, if you could speak in detail a bit more about the grant programs here that have been put on hold. Is that correct?
They did, yes. We had two main grant programs here in the Valley. One's called the Home Plus, one's called the Home in 5. And those programs always had higher interest rates. For example, last year, when buying a home, you could probably get a home for about a 3% interest rate. Those grant programs were almost at a 4%. But, first-time home buyers, it was great. It would get you into a house that, you would keep that rate usually for about 3 years, and you could refinance or sell and not have to owe any of that money back. But at the point now where we're at almost, the low 5 range, they don't have any room to increase rates any further to really build in that amount that gives us the grant. That's really where the grant would come from, is that spread between where the market is and what they were charging. So really that spread has gone away. So we might not see those programs back until we see rates start to go down a little bit.
Yeah, that makes a lot of sense. And then for those particular buyers that are looking for some help with down payment, because that's really what the grant program does, right?
Yes.
I mean, we're kind of coming up on, for some people, this might really work out. And I'm showing a slide here, but we're kind of coming up on, this yearly thing we do every year, which is file our tax returns. And then a lot of people get a refund. So is tax day today? April 15th, right?
Yeah.
The day the
That's
podcast
tomorrow,
drops.
but I think you have till Monday, right? I think the 18th they have.
Until the 18th. Yeah. But anyway, Keeping Current Matters, which is a publication that I absolutely love, I follow them quite a bit, did have some suggestions on how home buyers can use their tax refund. And if, somebody was in the particular situation where they were depending on the grant program for down payment, maybe their tax refund could be an option.
That's great. Yes. And we see a lot of our clients, now that the grant program has gone away, we had to reach out to a lot of our clients that were approved for the grant and to let them know that it's on hold right now. And it's incredible. A lot of them were able to do exactly what you're saying, use their tax refund, which they're getting around about now and during tax time, or getting gifts from family members, which is allowed too. You don't have to come in with your own down payment. That's kind of a misconception. A lot of people think you have to have it in your account for 60 days. It has to be something that we could source, but gifts from family members can be used as down payment as well. And also at Waterstone, we have a unique program. It wasn't used a lot, because the grant programs were available locally. But we have something called the Wealth Builder program, where if you're okay with a little bit of a higher payment, with a 20-year term instead of 30, you could actually get you 100% financing with no money down. It's called a Wealth Builder because, you're actually going to be making more payments towards your principal than the interest off the bat. So that's why we're able to get you 20% down. That's
interesting. So who's the perfect candidate for that?
Anybody who's okay with, a little bit of a higher payment. If you're kind of tight on cash, you want to try to qualify for as much as possible, but you don't want that higher payment. It might not be the best program for you. In that case, it might be best to do get your tax refund or a gift from family. But, if your income is high and you're buying well within your means and you're okay having a little bit of a higher payment, it's a great program for these people.
I love seeing those. I love seeing those type of programs. I think that at the end of the day, it really puts, buyers in more of, hey, I got to take ownership of the situation and
Yeah.
understand that, there's risk associated with this, and especially when we are buying real estate. So seeing those type of programs are actually like the total opposite of what we've kind of seen in the past when they were dealing with rates rising, with neg am mortgages and all that crazy stuff that we saw got us into this mess in the mid 2000s. Now they're coming out with programs that actually really make sense. And I think that's great for our market. That's great for the consumer. I don't want to seem like the guy that has no heart for people that were with the grant programs, but I also feel like this is kind of a protection. If they're backing off because the rates are high, that means it's a very risky plan. And if you're going to be leveraging that high with that amount of uncertainty, maybe pumping the brakes is the right thing for you. Maybe reassessing and looking at what your options are is the right thing to do. So I think anyone that is in that position, don't take it as bad news. Take it as like really good news, actually, to really assess your situation so you don't make a bad decision and regret it,
Good point, man.
Absolutely. And is it just the normal credit qualifications for that particular program? Is that all sort of the same?
Yeah, it's a little higher. You need at least a 680 credit score, but outside of that, it's very much similar to the grant programs.
Awesome. I again love that there are some alternatives here for our buyers. And right before we got on the show, you guys were talking about another program that is available out there that may alleviate on the rates. Did I understand that correctly?
So, with interest rates at high ranges right now, we have a lot of clients asking us for different options. And an option that's beginning to get more and more popular, that used to kind of be a bad word after, the crash that we saw in 2008, because back then these were popular. They're called ARMs, adjustable rate mortgages. And between 2006 and 2009, you would see 2-year ARMs or 3-year ARMs, where the rate's fixed for short periods and can adjust anytime after that. And that was kind of a big reason that we saw the crash, is that there were rates adjusting, but a lot of inventory, a lot of risky loans. It was a lot of things that led to it. So for a long time, nobody wanted adjustable rate mortgages. So a 30-year fix was the way to go over the past 12 years. But we're really starting to see a lot more people asking about this, or becoming more and more popular, because you see a lot of people buying either their first house, second, third house. They don't keep them for more than maybe 7 years, or they refinance within that period. So a lot of people are okay maybe with a 7-year ARM, where rates are maybe about half to 3/4 lower than the 30-year fixed. So to get that lower interest rate, they're okay kind of taking that risk, because they know either they're going to sell the home, they don't plan on living it in more than 7 years, or they understand rates are going down eventually, and they could always look into getting a 30-year fix down the road. So those are becoming more and more popular. Just know that those are options as well.
Awesome. So it's important as a buyer to consult with somebody you trust, like Ryan, preferably Ryan, and talk through those, particular programs and see what might be the best fit for you, because what you go into his office thinking might be the best fit for you may not be.
Yeah.
So super important. Yeah, super important to have that consultation. As you know, every month I take a look at the inventory levels, still bumping along the bottom, still super low. Because it's the market that I work in, is mostly single family market here in Maricopa and Pinal County. We're right at about 3,500 homes, which we've been sitting at for quite a while. However, let me just show you this here really, really quick. Hold on, all messed up. So the month's inventory I thought was pretty interesting, and I haven't showed this slide in a little while. For those of you who are only listening, every once in a while we look at how many months inventory that we actually have. We also look at, how many active listings, how many new listings, how many sold listings month over month. And it just kind of gives us a little snapshot of what's going on in terms of inventory levels. And if you take a peek here, March 2022, obviously we're still in April, so we don't have that number, but March 2022, we're just over 1 month worth of inventory. Which if you go back to March of 2021, we were in a similar area.
And I think, reflecting on this data, one of the interesting points that we can really look at here too, is that I think a lot of people were kind of correlating what the reaction of raising rates would do, and it might calm things down, and it might, bring less buyers to the table. But you kind of look at this, and you look at exactly what's happening when rates started originally going up. We're talking, December is when we started seeing it. You look at January had 1.6 months as our inventory. It was starting to go up high, 1.43 in February, and then a huge drop to 1.09, which that's like the opposite. So if anything, it shows
Inverse of rates
all
right
the
now.
supply
Yeah.
and demand thing here in Phoenix. That's very much driving our real estate market. And that also says it speaks highly about the confidence in our consumers. And we're not talking about small purchases, that we're with average homes being at $500,000 and a lot of people purchasing in the sevens. It's a big chunk. To qualify for that, you've got to, have a lot down. You got to have good credit. You have to have good experience. So there's a good chance you're pretty smart. And it sounds like a lot of these people that are making these choices are making these choices. So fear is not something I think on the front of this decision, which is one more indication that I think as we navigate through these higher interest rates, I think supply is going to remain low. I think the market's going to remain strong. The rest of the country will probably respond differently. I'm sure more rural areas that don't have the strong economies, maybe are recovering from COVID, from their small businesses being hurt. They're going to feel this rate going up. We might see inventory levels spike. We might hear different news, but I have a feeling when that does, the nation will react. Rates will eventually start to come down. And I think it's going to be off to the races like probably never seen before here in Phoenix.
Yeah. Yeah. And what I'm seeing just with our clientele is, there's quite a few people that are moving out of the Phoenix area. There's a lot moving in, but there's quite a few moving out, and they are moving into these smaller towns that are more affordable, to get a bigger, better home, bigger piece of property, whatever. And they're taking their jobs with them because a lot of people are working from home. So I feel like that may be, sort of spiking the economies and the populations in these smaller, more rural areas as well.
Absolutely. Absolutely. And it's funny because, coming from New Hampshire, and then moving to the city, this is a big city, but then you have a lot of people that have lived here in Phoenix, since the mid 90s or, even early 90s. And they came from other big cities. So this city to them wasn't really a big city. And I hear a lot of people saying, we're getting out of here because this is just too busy. There's too many people. Mm-hmm. I'm sensing it. I'm seeing it, not to the effect of like, whoa, I can really notice it, but kind of empathizing or understanding where they're coming from. Yeah, I get it. So people are like, hey, we're out. This is too busy, too much traffic. It's too crazy. We don't like it. We're going to go somewhere else that's maybe not as quick and as large, and makes sense.
It's kind of what Californians were saying about California and moving to Arizona. Now
Correct.
Arizona's moving further east.
Correct. Exactly.
Yeah.
So funny.
But you're right. I mean, it's funny because, everybody's always moving and changing, and life happens, right? But it's funny because we have just a handful of clients I can think of from the top of my head over the last 2 or 3 years that have moved out of Arizona and have recently called me because they're on their way back.
Yeah.
So there is something wonderfully magical about this area we live in, for sure.
Oh, yeah, very much so.
Anything else you'd like to add, gentlemen?
No, I don't think so at this point. I think, just remain smart in how you're approaching this. If you're thinking about buying and selling, I know it's hard to take your emotions out of it, especially when there's uncertainty and rates are high and you're wondering what's going on. There's still a lot of really good tangible stuff out there to sink your teeth into in making these decisions. So, and if not, and you can't find it, or you just want to bounce it off someone, do that off your professional.
Yeah.
Somebody
who has some experience, who's been around, who's been through several transactions, several different markets, because they're the ones that are going to be able to position their advice appropriately, and consider all of the factors involved. You got somebody that's just fresh out of school, out of real estate school. They just don't have the ability to do that. They don't have the experience behind them. You get somebody, mom or dad that maybe bought a house 35 years ago. things are really different now.
Well, yeah. And if your source of advice is a fearful person or the opposite, a very risky person, you got to ask yourself how much weight you're giving that advice.
Yeah.
So, yeah.
15 years, Katie.
15 years. No, he's more. He's like 18 or
Yeah.
something like
19,
that.
yeah.
19.
It's things seen different markets, right? Things
Oh.
changed quite a bit.
Changed
Yeah.
quite a bit. And before we head out, I just wanted to make a quick, just say something quickly about the previous podcast that we did, which was 2 weeks ago. So as you guys know, we're here every 2 weeks. Once a month, we're here with Ryan, but we did talk through the mindset of a buyer and how different it is here now, even than it was, 4 or 5 years ago to purchase a home here in Phoenix, and what kind of expectations you need to have, how painful will it be, and what you really need to be prepared for. So if that's something that you're interested in learning more about, just go ahead over to our playlist, which is on YouTube at Team EvoAZ is our handle. You'll see it. It's just our last podcast from 2 weeks ago. Or if you are listening to your very favorite podcast platform right now, please subscribe, download, and rate us. And also you can look at the playlist on whether you're on Spotify, iTunes, Google Podcasts, wherever it is that you are, to find that those previous shows. They're pretty informative, and it doesn't ever hurt to have knowledge, right? You can't know too much, can you?
No.
I don't think you can.
Not possible.
All right, guys, if you are interested in being a guest on our show, please follow us. I just gave you the handle, but I'll give it to you again, at Team EvoAZ. We are on YouTube, Instagram, and Facebook. Give us a like, send us a message. Let us know why you'd like to be on the show, or just send us a message and tell us how much you love us. We like that too. We don't mind hearing that, do we?
Nope.
Just like knowledge, you can't get enough of it. Keep it coming.
Exactly. Those two things. All right, Ryan, it's been awesome. Thank you so much
Thanks
for being
again.
with us today.
Have a great day, everyone. Thank
Bye.
you.
Thank you.
Bye.